Silver is called inelastic because you don't need so much of it in all of these components. You go to silverwars.org and you'll see just how much silver is needed in all of these high-tech weapons. 500 ounces in the cone of a Tomahawk cruise missile. And if you, let me just see here. Am I able, I don't know if I did this the last time we were together or not. Am I able to share my screen with you? Here is this is kind of the presentation that I've done, and I did this at Rick Rule's conference. And if you see right here, the present consumption of silver for war purposes is at the rate of 100 million ounces a year. This is 1942. You can Google S.2768. This is a subcommittee hearing, and it says it's only a matter of months before we'll need 200 million ounces per year. And you go here to the supply demand numbers from the Silver Institute, and you don't see anything in the way of military at all. Even all the electronics, photovoltaic, that's solar panels, brazing, photography, jewelry. Where is it? And as a result, this is why these are all of the commodities traded on the COMEX. The red represents the biggest 4 commercial banks, and the green is 8 commercial banks. It's the 4 plus another 4. It's the largest concentrated short position here in silver of any commodity traded on COMEX. Why the hell would they be doing this? It's as dumb as a mud wall. Look at crude oil. We're way down here. Remember when they made it -40 a barrel? They have the ability through these levered contracts to do just that. And then you look at this, and this is what I was talking about, the LBMA. 800 million ounces, 500 belong to the ETF, so they have 300 million ounces. But you can see this drawdown. They are drawing down the stockpiles of precious metals using the suppression of the Western markets to do just that. So it's a big deal. And I think this is a very strategic deal that these countries, these Brics countries understand. Russia understands it. China understands it. India understands it. And they're looking at silver as anything but industrial and far more strategic. And I think using the Western stupidity of suppressing these markets to fight these wars, and the military industrial complex. I mean, it wasn't, you believe that it wasn't Biden who has been making these overtures of giving long-range missiles to the Ukraine as he's walking out the door. Who's pulling the strings? It's the people, probably the military-industrial complex, who's making these decisions. And this is why they've needed to have this massively concentrated short position, the most of any commodity traded on the exchange in silver, because it's needed. And, you know, in 42, they were open about it. Yeah, we need silver for military, but now, even though we've been short supply demand for 4 straight years, it's just strangely off the supply demand numbers by the Silver Institute.
Silver is often called the indispensable metal, and for good reason. While many view it as a precious metal akin to gold, its real value lies in its unique properties and versatility, making it critical in high-tech industries, weapon systems, and renewable energy solutions. Yet, there's a bigger story here, one that ties together economic strategy, global power plays, and financial markets. Let's dive deeper. Silver's industrial demand is unparalleled. As Andy Schectman highlighted, just one Tomahawk cruise missile requires 500 ounces of silver in its cone. Multiply that by the countless military systems, renewable energy projects, and consumer electronics manufactured worldwide, and you start to grasp the enormous demand for this metal. Take solar panels as an example. They rely on silver for their photovoltaic cells, essential for converting sunlight into electricity. With the world pushing toward greener energy, the demand for silver and solar technology alone could outpace current production levels. Yet despite its increasing necessity, silver's price does not reflect its strategic importance. Why? The answer lies in manipulation. The silver market is rife with anomalies. According to Schectman, 8 major Western banks hold the most concentrated short position of any commodity on the COMEX. Why would they suppress silver prices in a world where demand far exceeds supply? It's not a conspiracy theory. It's a calculated move. Historical evidence supports this. In 1942, during World War II, U.S. lawmakers openly discussed the critical role of silver in military applications, noting that up to 200 million ounces per year were required for war purposes. Fast forward to today, and silver's use in advanced technologies has only grown. Yet the public narrative remains muted. The military-industrial complex and strategic metal silver is not just an industrial metal, it is a strategic asset. The military-industrial complex knows this well. It's no coincidence that countries like China and Russia have been stockpiling silver, while Western nations focus on suppressing its price. By keeping silver artificially cheap, the West ensures its accessibility for military applications while deterring broader global accumulation. But this strategy has a downside. Emerging economies, particularly within the Brics alliance, Brazil, Russia, India, China, and South Africa, are actively decoupling from Western financial systems. These nations recognize the value of real assets, gold, silver, and other commodities, over fiat currencies. Russia, for example, recently announced plans to accumulate silver for state reserves, a move that signals its acknowledgement of the metal's strategic importance. The implications of silver suppression extend far beyond military applications. For everyday investors, this manipulation represents a golden, or should we say silver, opportunity. With demand skyrocketing and supply dwindling, the fundamentals suggest a significant price correction is inevitable. When it comes, those holding physical silver will reap the benefits. Moreover, the ongoing accumulation of silver by nations like China and India should serve as a wake-up call. These countries are playing the long game, positioning themselves for a future where tangible assets trump speculative financial instruments. The question is, are you doing the same? While silver takes center stage in discussions of industrial applications, gold remains the ultimate safe haven asset. Its value lies not just in its rarity, but in its historical role as money. Gold doesn't corrode, tarnish, or degrade over time, making it a perfect store of value. Unlike fiat currencies, which governments can print at will, gold is finite. Central banks worldwide have been hoarding gold at unprecedented levels. In 2022 alone, central banks purchased over 1,136 tons of gold, the highest amount since 1967. Why? Because gold is a hedge against currency devaluation and geopolitical instability. The suppression of silver and the accumulation of gold by central banks are two sides of the same coin. Both highlight the strategic importance of these metals in a world increasingly defined by economic uncertainty and geopolitical tensions. For investors, the message is clear. Don't be distracted by short-term price movements or manipulated markets. Focus on the fundamentals. Silver and gold are more than commodities. They are insurance policies against a system teetering on the edge of collapse. By accumulating these assets, you align yourself with the strategies of savvy nations and forward-thinking investors. As the global financial landscape shifts, those holding physical gold and silver will be the ones standing on solid ground. And when the dust settles, they'll be the ones writing the next chapter of economic history.
You know, it makes this kind of stuff makes you into a conspiratorialist. It makes you feel like, yeah, put my tinfoil hat on, or is it real? I mean, why would 8 Western banks hold the largest concentrated short position in a commodity that is being voraciously accumulated? Why do they allow such massive rehypothecation? And why are they short between 4 and 6 billion ounces of silver on the LBMA at a period of time when there's a drive by much of the Southern Hemisphere to accumulate it? These are all the kind of questions I ask myself and come up with the same answer over and over and over again. The military-industrial complex is very powerful, and they make money by keeping these wars going. They often are funding both sides, or they're involved all over the world in selling weapons. And most of what we've given the Ukraine in terms of aid has been in the form of weapon. And then, as Lindsey Graham says, we need to get our money back. So we're enriching the military-industrial complex by providing the weapons. And then after we destroy the country, we come in and steal all of their natural resources. I mean, the whole thing is just gross. But if you put it all together, you can see it. And I hate wearing that tinfoil hat, but is it, or is it real? Is it something that is right there in front of us, or are we all meant to sound crazy when we say these kinds of things? But why the hell would it be taken out of the supply-demand numbers? And why the hell are there 8 banks suppressing it? And why the hell is there that massive short position in London? And why the hell are they trading up to 3.5 times the annual global mine supply every single day? These are questions that I think, if you're honest with yourself, you come to the same conclusion that, Silver is far more important than we are being led on. And in a game where the United States has been the place to park your money forever, it was easy to keep this illusion alive. But in an environment where there's change, you can see why countries like Russia and India and China are doing the things that they're doing, why China's buying doré and concentrate all over the world, why India keeps buying it hand over fist, and now why Russia is saying we're going to actually buy it for our state as well, because I think it's far more important than any of us are being led to believe, due to the counterintuitive price action that is being controlled by a handful of Western banks. And according to what, Bart Chilton, who was told to back down, was a political decision, it's being managed. But all manipulations and all managements end badly, and they end poorly when the supply-demand fundamentals override them. And ultimately, I think that's where we'll go with silver, because it isn't just an industrial metal. It's far more important to the world than that. And I think that will ultimately bear fruit. I don't know when, but we're already on borrowed time, if you ask me.
If you're paying attention to the evolving financial landscape, it's clear that the narrative around gold and silver is shifting. These aren't just relics of the past. They're insurance policies, strategic assets, and for some, lifeboats in an economic sea storm. Let's delve deeper into why these metals are the linchpins of future wealth preservation and why their value is vastly underestimated. Silver's price action has been frustratingly counterintuitive. While demand surges in renewable energy, electronics, and even military applications, prices remain artificially low. This isn't a conspiracy theory. It's a reality supported by data. Consider the staggering short positions held by major Western banks on the COMEX. Why would institutions suppress silver prices in a world increasingly reliant on it? The answer lies in control. These banks aim to protect their broader interests. By keeping silver prices low, they ensure the metal remains accessible for industrial use while preventing a run on physical silver by investors. It's a calculated move, but one that's becoming increasingly unsustainable. The fundamentals of supply and demand are too strong to suppress forever. Let's talk numbers. In 1942, during World War II, the U.S. government openly acknowledged the necessity of silver in military applications, consuming 100 million ounces annually. Fast forward to today, and silver's role in warfare is even more pronounced. Modern missile systems like the Tomahawk require 500 ounces of silver each. With nations ramping up military capabilities, the demand for silver is unprecedented. But it's not just warfare. Silver is indispensable in green technologies like solar panels and electric vehicles. These industries are set to explode in the coming decades as the world shifts towards sustainability. With limited annual mine production and growing industrial demand, the stage is set for a silver supply crunch. While silver plays a dual role as an industrial and monetary metal, gold remains the quintessential safe haven. Its unique properties, durability, scarcity, and universal acceptance, make it the go-to asset in times of economic turmoil. Central banks understand this, as evidenced by their record-breaking gold purchases in recent years. In 2022 alone, central banks bought over 1,100 tons of gold, the highest amount since 1967. Why this sudden interest? It's simple. Gold is a hedge against currency devaluation and geopolitical instability. With global debt levels soaring and fiat currencies losing credibility, gold provides a stable foundation for financial systems. The Brics nations, Brazil, Russia, India, China, and South Africa, are actively challenging the U.S.-dominated financial system. By settling trade in local currencies and stockpiling tangible assets like gold and silver, they are gradually reducing their reliance on the dollar. This shift is not just about economic independence, it's about creating a more balanced global financial order. Russia's recent decision to accumulate silver for state reserves and China's aggressive gold-buying spree are clear indicators of this strategy. These nations understand that real wealth lies in tangible assets, not fiat currencies subject to political whims. The U.S. dollar, long considered the bedrock of global trade, is losing its appeal. With $36 trillion in national debt and an unsustainable fiscal trajectory, the dollar's days as the world's reserve currency may be numbered. Andy Schectman aptly points out that the U.S. creates $100,000 of debt every second. Such reckless monetary policy undermines confidence in the dollar, prompting nations and investors to seek alternatives. Gold and silver emerge as the natural choices. Unlike fiat currencies, they cannot be printed at will. Their value is intrinsic, grounded in scarcity and utility. As faith in fiat currencies erodes, the shift toward precious metals will accelerate. Silver's utility extends far beyond its monetary value. It's a critical component in emerging technologies that will define the 21st century. Solar panels, electric vehicles, 5G networks, and advanced medical equipment all rely on silver. As these technologies proliferate, the demand for silver will skyrocket. Yet, the supply side tells a different story. With limited global mine production and dwindling stockpiles, meeting future demand will be a Herculean task. This imbalance sets the stage for a significant price correction. For individual investors, the current landscape presents a rare opportunity. The suppression of gold and silver prices creates an entry point for those looking to hedge against inflation and currency devaluation. But timing is critical. When the manipulation ends, and it will, the price of these metals could soar. Investing in physical metals is the safest bet. Unlike paper derivatives, which are subject to the same manipulations that suppress prices, physical gold and silver offer real ownership and protection. Diversifying your holdings and securing reliable storage solutions are essential steps in building a resilient portfolio. Geopolitical tensions add another layer of complexity to the equation. As nations like Russia and China decouple from the Western financial system, the demand for precious metals will only grow. These countries are preparing for a future where gold and silver play central roles in trade and currency systems. The West, by contrast, seems caught in a cycle of fiscal irresponsibility and short-term thinking. This dichotomy highlights the urgency of accumulating precious metals before the tide turns. The suppression of silver and the accumulation of gold by central banks are not isolated phenomena. They are part of a broader strategy to control resources and maintain financial stability in an increasingly volatile world. For those paying attention, the message is clear. Gold and silver are not relics of the past. They are the assets of the future. By holding these metals, you position yourself on the right side of history, ready to navigate whatever challenges lie ahead. As we enter 2024, the landscape for gold and silver appears brighter than ever, with market dynamics signaling potential for significant price movements. These precious metals, long considered safe haven assets, are poised for an interesting year ahead as geopolitical tensions, economic uncertainties, and shifting monetary policies converge. Gold price prediction 2024. Gold, often regarded as the ultimate hedge against inflation and economic instability, has consistently demonstrated resilience in uncertain times. Several factors point toward a bullish trend for gold in 2024. Central bank demand. In recent years, central banks have been stockpiling gold at record levels. In 2023, over 1,100 tons of gold were purchased globally, the highest annual total since 1967. This trend is expected to continue in 2024 as countries seek to diversify reserves away from fiat currencies, particularly the US dollar. Emerging economies like China, Russia, and India are leading this charge, further supporting gold prices. Inflation and monetary policy. Despite efforts to tame inflation, many economies are still grappling with high price levels. Central banks may pivot towards looser monetary policies if economic growth slows, which could weaken fiat currencies and strengthen gold. Analysts predict gold could break its previous record highs and trade between $2,500 and $2,800 per ounce by the end of 2024, depending on the severity of global economic challenges. Geopolitical uncertainty. Rising tensions in regions like Eastern Europe, the Middle East, and Asia could further drive demand for gold as a safe haven asset. Historically, geopolitical crises have supported gold prices, and any escalation in conflicts could push gold well beyond the $3,000 mark. In conclusion, gold and silver are more than just investments. They are lifelines in a world grappling with debt, manipulation, and geopolitical uncertainty. As the global financial landscape evolves, these metals will play an increasingly central role. The question is not whether their value will rise, but when, and those who act now will be the ones reaping the rewards.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. join our free gold and silver newsletter today, link in the description.